Following the stronger than expected Amazon and Apple results overnight, can the S&P 500 hit a new record high today? Hello everyone, my name is Farwaz, market analyst for City Index. Today is the 31st of October. Now, before we get into the S&P 500, let's have a look at the economic calendar for the week ahead. The week ahead would have been quite busy had it not been for the ongoing US government shutdown, which means that we will probably not have the government data, including the official non-farm payrolls report on Friday. So the focus will instead be on the private sector data, including the ADP non-farm payrolls report, which comes in on Wednesday. Last time we saw a surprise 32,000 drop in ADP payrolls, which is not a good sign for the US labor market. And if we see another negative trend, I think that would cement expectations that the Fed will cut interest rates in December. Remember, the FOMC was quite hawkish at the press conference anyway, where Fed Chair Powell said that a December rate cut is not a foregone conclusion. That caused the US dollar to rally across the board. I'll come back to the US dollar in a minute, but just finishing off the economic calendar, the key highlight, I think, for me is the RBA rate statement or rate decision on Tuesday. The RBA rate decision is going to be very important because previously the central bank was expected to cut interest rates, but earlier this week we had inflation data from Australia coming in slightly stronger than expected, and that caused the probability of a cut to drop. So if the RBA holds interest rates and sound more hawkish than markets expect, and in light of the US-China trade truce, that could potentially cause the Australian dollar to rally. And looking at the Aussie against the US dollar here, you can see that it has pulled back a little bit in line with all the other major currency pairs, with the US dollar rallying on the back of that hawkish comments from Fed Chair Powell on Wednesday. But the path of least resistance still to the upside, I think, given the higher highs and higher lows that we've observed on this currency pair. The slope of 200-day moving average is now pointing higher, which is an objective way of telling the long-term trend, which is bullish. At the moment, the Aussie is testing support here between 35 to 6,500. A very important area this is because previously it was support and resistance. We have a broken trend line there. The 21-day exponential moving average comes into play there as well. All of that makes me think that the Aussie dollar could potentially bounce back from around current levels. So keep a very close eye on it. And if the RBA does hold interest rates, I think that could be the trigger for a potential rally. In any case, resistance needs to be taken out between 66 to 66.25, the shaded region here. Above that, it will be quite bullish, wouldn't it? Because then we'll have created a higher high. And given the overall bullish price structure, we could well then see some sharp gains moving forward. But let's see if it can manage to break above here first. After the closing bell last night, we heard from Apple and Amazon. Amazon results were quite good, sending the shares sharply higher in pre-market. And Apple initially fell, but then it recovered following its results. And as a result of that, the S&P 500 is holding near record highs. And it could still head towards that 7,000 level, which is the next key psychologically important level. The underlying trend is clearly bullish, with the index making higher highs and higher lows. And the last couple of days' weakness is more to do with profit taking than a trend reversal at this stage. So this pause could be a healthy one because it will allow the RSI to unwind from its overbought conditions, for example. But in any case, the path of least resistance is to the upside, and I think 7,000 could be the next key level to watch on the S&P 500. Can we get there today? Well, that's a key question. A lot will depend on the performance of the technology companies, and in particular NVIDIA, which is now the most important stock in the world right now, right? It's causing all sorts of volatility for the markets. Whenever it rises, you tend to see the indices follow suit. So a lot will depend on NVIDIA, given the size of it and its importance on the major indices. In terms of support levels to watch, well, 6,800 or so is a short-term level to watch. Below that is the shaded blue area between 6,750 to 6,765, where we have the 21-day exponential also coming into play as well. Previously, this area was resistance. We broke above it last week. And it remains exposed for a potential retest from above. Should we get there either later today or perhaps next week, we could possibly see a bounce there. But at the moment, it doesn't look like it wants to come down, and we could instead see a continuation towards that 7,000 level from here. Don't forget to like and subscribe, and for more market updates, head over to cityindex.com.